Okay, so let's talk about today one of the most important key factors that you must understand in trading: order flow. Okay, you have to understand what the banks, the big institutions, are really trying to accomplish. And their primary concern or interest in this business of trading is just liquidity in areas of imbalances where they would primarily like to rebalance the market. Yes. So when we see imbalances taking place in the market, you must understand they at some point are trying to always rebalance the market. Okay. Coming back to an area where there's an imbalance to allow them to either push higher or lower, but they need to cover ground, okay, and fill orders. That's the key to it. So if you really break it down, when we talk about order flow, you have to understand those two concepts: liquidity and imbalance. All right. So the market is either pushing higher and making higher lows and either grabbing liquidity, all right, and then turning back around, or making lows and lower highs to grab liquidity beneath. That's all the market is really concerned about, is rebalancing, like I said, guys. But the most important thing is taking liquidity. It's always trying to stop traders out either at sell stop zones or areas of buy stops. That's their goal. That's how they collect our money as retail traders. That is their only interest in this business, is to stop us out. Okay? That is what they need to do. They need to fill orders, but also stop traders out as well. So let's talk about that today, because I just want to show you, we'll talk about the trade that I took today that I posted on Discord, say for instance, all right? And we'll talk about, I'll show you the area where liquidity was actually swept. So, or a lot of people like to talk about grabs. So a liquidity sweep or a liquidity grab. So I'm going to show you this on my higher time frame, my 60 range chart. And I don't want to kind of like make this a long-winded video because I just want to point out the key aspect, the most important goal of what the bigger banks are trying to do. And you must understand that, because they are the ones that push and pull the markets on a daily. I say this every single time: we as retail traders do not have any impact within the markets. We want to be able to identify what the institutions are trying to do, all right, following order flow, because we are following their pattern. We are following the path or what they are trying to accomplish overall within the markets. We want to be able to see areas where we can get into trades where they're either pulling the market back and trying to rebalance the market and take opportunities. Say for instance, if the market is trying to push higher, okay, and then it breaks through, sweeps liquidity, leaves behind an imbalance, the market pull back to rebalance at a certain area, and then we'll look to go long, okay, because there's that imbalance there where we think that the market, or more likely the market, is going to pull back to, and it does, to finish what it was trying to do, fill orders, okay, so that it can continue pushing higher. And same thing in reverse when we see it in reverse. So let's talk about this right now, all right? So what I notice here on my 60 range chart, okay, I'm not going to go into great detail about it, but you must understand what I'm saying. If you do not know much about institutional order flow, I highly recommend that you actually do your homework, do some research, and learn about it, okay? Because the sooner that you're able to understand and trade, I should say this, the sooner that you're able to understand and identify, okay, again, those two things, what's going on in the market. Number one, liquidity, okay? It's all, you see it everywhere within the market, okay? You see it each time that a high is swept or a low is swept. You must understand what's taking place there, okay? And if you don't, please do yourself a favor and do the research and understand, because when you do that and you understand it, I promise you that it's going to improve your trading. So, say for instance here, the market, like I said, is only going to move in two directions: higher highs or higher lows, okay, or lower lows and lower highs. In this case here, we're moving to the upside, okay? Now this is on a high time frame chart, but we're going to scale back a little bit. We're going to go back a little bit in time here and to take a look here. When the market made a high right here, it pulled back. What did it do on the upside here as it pushed higher? It took out this buy side liquidity here at the tops, right? And it did that each time that it made and continued making higher highs, okay? It made a high here, it pulls back, it's taking out some areas to the downside, breaking through sell stops and stopping traders out, okay? And then it turns back around and it rushes to the top here, takes out these buy side orders right here to stop traders out as well. So it's taking out liquidity at the top end. Okay, that means it's taking money from traders that look to go short here, and it is taking out those stops at the top there. So it continues doing that. You know, that just the typical flow of the market, making higher highs and higher lows, what we see taking place right here. Okay, and then it gets up and it pulls back pretty significant here. Breaks above here, taking out these buy stop orders at the top. Okay, breaking through liquidity right there. Okay, taking that area liquidity out, pulls back, and then this is today's. Well, this was last week, but moving it into the overnight session into the till today's session. Okay, so what I noticed overnight, we had this high right here, right? Okay, and price goes up there. Okay, it made this higher low right here. It goes up there and it takes out these buy stops right here. Okay, these stop orders, or you know, where buyers had put orders on the sell. Okay, to go short. There's buy stop orders sitting right there. So once the market gets back up there, stops those traders out, it's collecting an area of liquidity. Okay. So when I saw that, the moment that price broke higher and broke through this area of liquidity right here, you have to immediately look to see if there's an area of an imbalance that's left behind. Because in most instances, the market is going to want to do what? Come back to rebalance itself. Come back to that imbalance area and check that area. All right. And then when it comes back to rebalance, what it's trying to do is fill remaining orders to possibly push the market what? Higher. Okay. Now it may, once it gets to that area, fill orders, push it higher a little bit. Okay. And then it could possibly turn back around. But in most instances, when it rebalances, it's looking to come back, fill remaining orders, and then it may push up a little bit, or, you know, like I said, okay, or continue pushing higher, making a new high. Okay, but in either event, it's going to rebalance itself at some point. And when I saw this right here, there was definitely an imbalance once it broke above this area of liquidity right here and took out all those buy stops. Okay, all right. Something else that I clearly identified as well was that going into, or when the market reopened yesterday evening into the overnight session, look what happened. We had a gap up right here. You see that? Okay. But the market pushed higher, like I said, to sweep that area of liquidity right there. Some people will call it a gap, okay? So when it did that, there also, even though it's a gap right here, all right, a void, there also, like I said, was an imbalance that was created. So basically, once price broke above this high right here, swept that area of liquidity, I look at the very next candle in which was created, which was this down candle right here. So at that point, I said to myself, okay, so price broke higher, swept the area of liquidity. But where did the buying that pushed the market higher actually take place? In this area right here, okay? So, you know, if there was say for instance, a green candle right here that pushed to the upside, I took out, I swept this area of liquidity right here, then I would mark this top of this candle right here, and then the bottom end, which would be right here below this last candle right here, which was this red candle. In between that area will be the area of imbalance. So let's just take I'm going to create a new line right here. So give me a second. So for me, when I saw price, like I said, taking out this top right here, this area here, there was leaving behind an imbalance candle in a sense, which would have been right here, but it gapped up. So the next candle, which closed, which was this red candle right here, you know, you draw it from, for me, I take it from the top end of this green candle right here, okay? And I imagine as if there was a green candle that pushed up, grabbed liquidity right here, but we had this void where the market pushed higher, so there was a lot of buying that came into the market, okay? And then, like I said, from the close of this red candle, so I marked the lower end of that red candle, the top end of this green candle here, the area between is going to be the imbalance, right? So I was looking for the market to come back, okay, once we got some type of rejection to fill this area of imbalance in between this purple line and this green line right here. This is off my 60 range chart. So that's when I switched over to my 12 range chart, or scaled down to my 12 range chart, and started looking for the market to start to break down, okay? Meaning it started to make lower lows and lower highs, okay? And looking for the market to do what? To start taking out sell side or sell stops, okay? Meaning breaking through areas of lows, grabbing liquidity at the bottom end where orders were placed to push the market higher. So at some point, they're going to, what would happen once you see a liquidity sweep is that you would hope what's going to happen is that with an imbalance, it's going to come back down to rebalance itself, which means come back to this area right here, okay? Rebalance the market, okay? And it does, okay? If you scale down to your 12 range chart, well, for me, it's 12 range chart. You may trade time-based charts. But when I saw this for my sake, okay, so this is the area where the market was at the tops right here, okay? And then this area in between here is what I was looking for the market to come back down to and rebalance itself. So if we look at 12 range chart, what we see is the market just, moving to the downside after, as I said, taking that area of liquidity at the tops there, and then it turns and starts making these lower lows and lower highs. Now, there's that big gap here, okay? As we saw, it looks smaller on the higher time frame chart, but there's a major gap right there. So you have to imagine that there's an area of imbalance right here where the market gapped up. It needs to come back and it needs to refill that area there to balance itself out, okay? Now, it did come down into the session yesterday, which was open, I think, about till 12 Central Time, 1 Eastern Time, I believe it was. But anyways, it didn't quite come all the way back down to this area of imbalance, okay? And then overnight, to the overnight session, it pulled back. So there was opportunity to get back into the trade or get to the trade to take it back down to refinish filling the area of imbalance, all right? Basically, like I said, rebalancing itself. So you have to be able to, follow the institutional order flow because we need to, as retail traders, trade like them, understand what they're trying to do. That is the win all for us as retail traders. So I took my position once the market kind of opened up. It was right here around the 30, I think it was like 33 3/4 or 34 area, somewhere around there. It was somewhere in here after the market opened up and took it back, went ahead and took it on down. What did it do? It came right down to this area here, okay, where I have this green line at. If you look at the 60 range chart right here, that is the area where there was an imbalance there. It comes to it, and then look what happens once it fills it. Remember what I said? It came to it. We'll go back to scale down to the lower time frame chart. Green line is that, again, it's on the 12 range chart, but that green line is that area where price needs to come back to rebalance. Comes to the area, rejects. It's filling orders. They are refilling orders to push the market up, okay? All right? So right now the market's moving sideways. But I just want to show you this because, like I said, institutional order flow is the key really to making sure that you are moving in the right direction, okay, as the bigger players, okay, and that is the bigger banks. So when you are able to read what's going on in your charts and understand in full what's trying to be accomplished, then that's when you're going to really, it's going to be an eye-opener for you. That's when you're really going to be able to start to become more profitable and grow your account at the same time. So just spend some time reading the charts, okay? And look for those areas when the market is pushing higher and you have areas of liquidity sweeps, or if you want to call them liquidity grabs. And then the market moves in the opposite direction, all right? And start to identify at that point where there are areas of imbalances resting below. Same thing if the market is pushing lower, okay? So you got in areas where market makes a low, pulls back, makes a lower, sweeps below, taking out the low, or breaks right below the volume area at the bottom end of that low. So, I don't know, maybe there's a low here. So say this low right here, right? Okay. The market pulls back. And what does it do? It comes down, it sweeps this area right here. Okay. And once it does that, then look to see if the market is going to shift and change direction and be able to see, are there areas of imbalances on an area imbalance where price could pull back to or want to trade back up to rebalance itself. Okay. So, in this instance right here, the market comes down. What does it do? It sweeps the bottom end of this area of volume. Okay, so it's sweeping this area, this low right here. And then look what it's trying to do. It's trying to rebalance itself by going back up and possibly filling in the imbalances that were created as the market pushed lower here, sweeping through the lows here. Okay, so you have to be able to understand what they are trying to accomplish in the end of all things. But that's all I want to share with you guys today. Hopefully that provided some insight and some value to you. Spend some time, like I said, going through your charts, looking through things like that. And I'm going to break it down, my actual trade itself. I'm going to post that for the elite members, those individuals who actually support the channel in the sense of, you know, have become an elite member. Again, you can join, guys. I mean, it's $6.99 a month. It's the price of a cup of coffee. You know, there's no pressure to join. It's your choice to join if you want to. But what you receive are my trade breakdowns. So when I do post the trade breakdowns to basically show you what my thought process was leading up to my trades, okay? All right, and why I took those trades. You know, you get that full breakdown. So it provides an understanding of what took place prior to and why I was in the trade, okay? So I find that helps a lot of traders out, especially beginner traders. And if you're interested in joining, all you have to do is click on the membership tab on the home page of this channel, okay? And then I believe the membership tab's also on the video, on all the videos. So any video you click on, there should be a tab that says membership. If not, just go to the home page, click on that. And you want to choose the elite membership. It's $6.99 a month. You also receive the video playlist. It's just a list of videos that I've hand selected that I feel that are, I guess, more impactful or more valuable, or provide more valuable information for those that are trying to grasp an understanding more so of how I trade in general. So, you know, primarily I'm a supply and demand style trader, but it's all about following institutional order flow that at the end of all things, okay? You have to understand that. But outside of that, hey, I'm going to go ahead and jump off of here. I am done today for trading because I only took a one and done trade. I only needed to take one trade after noticing what was taking place this morning at the price swept that high. But please do me a favor if you don't mind and drop a like on the video by clicking on the like button. As well, if you are not a subscriber, please take the time to go ahead and click on that red button down below that says subscribe. Click on the bell next to the subscribe button and make sure to turn all your post notifications on so you never miss one of the uploads here on the channel. If you're interested in joining our Discord, we have a great trading floor, primarily where we as traders come together and we post our trade entries and discuss them at the same time. But we also have a general chat side where you can come in and ask questions if you're a futures trader, because this channel does pertain to the future market solely and only. So if you're interested in doing so, find the link to the Discord down in the description portion of the video. Click on it and invite yourself in. That's all I have for you guys today in this video. I'll see you in the very next one. Take care.